Bloomberg Audio Studios. Podcasts, radio, news.
The Stock Movers Podcast, your roundup of companies making moves in the stock market, harnessing the power of Bloomberg data.
Let's take a look at some stocks on the move this past week. Bloomberg News cross-asset reporter Denitsa Sakova on the week's stock movers. And we got to talk about Tesla. It moved around a bunch.
Yeah, we have to talk about Tesla. It was down 9% on the week. And Friday really was a really tough end of a very tough week. We had JPMorgan, one of the most bearish analysts on Tesla, further reducing their estimates for the company earnings. They're, of course, citing that report we got on car buying recently and the backlash against Elon Musk. Of course, on top of that, we have the broader market sell-off putting pressure on all tech stocks, on Magnificent Seven. We had the Nasdaq 100 fall into correction. And later in the day, we had even more bad news from Tesla as their vice president of software engineering and one of the key people of the company. He's been there for like 13 years, and he's been one of the people who has been at all those presentations together with Elon Musk, and he's leaving the company, so perhaps that's adding more pressure. The stock is down 40% year to date.
Yeah, and it's down 50% from its highs back in December. What I find surprising, Denitsa, about this is we're not at our recent lows. I mean, Tesla stock hit a low this year back in March, like almost a month ago at this point. So unlike some of the other stocks that really moved this week, Tesla's not even on its 1 month lows.
Yes, true. Tesla was this big Trump trade, and ever since the stock markets have been going down, it's been one of the first names that was hit the hardest. And obviously, there has been a lot of talk that potentially tariffs are not going to weigh on it so much. But some of the stocks that were hit a lot.
Can I just say what's crazy is that earlier in the week, we actually saw Tesla rally because there was expectation that maybe Elon
Musk would leave Doge and go spend more time at Tesla.
Yes.
Exactly. Right. So his head of software engineering may be leaving, but maybe he's coming back.
It feels like weeks ago.
I'm just saying.
He's got like 6 or 7 companies. He's got more than a dozen kids. Like, just because he leaves Doge doesn't necessarily mean he's going to be donating not donating, but you know what I mean, spending all his time at Tesla, right?
But he could come back.
But yes, that was the optimism.
Yeah, that was the optimism.
Okay.
True.
But still not great for the week overall.
But they're saying technically he's leaving, but he will still play an important role. So
I'm so confused. All right, what about Nike?
Let's look at Nike. Nike's had a rough day on Friday. It started lower, obviously after the big announcement on Thursday of tariffs, which sent the stocks in turmoil. Nike's still down on the week, about 10%. Despite the relief on Friday. So the relief on Friday came after one of the first announcements of negotiation was coming from Vietnam, and President Trump had said he had a very productive call. We know that about a half of Nike brand shoes actually come from Vietnam, so you can imagine that's why some of the relief came. It also happened with Lululemon, which also surged on the day, but we recently had earnings from Nike that weren't painting so much of a nice picture to it. They were saying they have to clear out all the inventory, and Nike shares really started to tumble after that earnings report, despite some optimism earlier in the year about the rebranding, about catering to women, the Super Bowl ad. So that optimism hasn't been enough to lift the stock lately.
It's wild to look at the max chart for this because you see that this stock is now trading at levels last seen in 2017. That's crazy.
Yeah, it's incredible. We were all talking about that turnaround effort, about the new CEO, and clearly now it's not working so well. But now we're in a macro market, so it's a little bit different.
All right, can we talk bank stocks? They got hammered this week.
They got hammered. And we've been talking about that recession trade, and we've been talking about credit, and we've been talking about stocks. But really, banks, they had their biggest 2-day drop since March 2020. And of course, most of it came on Friday when China warned about escalating the trade war. Some of the big names we're looking at: Morgan Stanley, Goldman Sachs, Citigroup. Most of them are down about 13% on the week. So we also know that banks' earnings are just around the corner. We have JPMorgan, Wells Fargo, and Morgan Stanley kicking off their reporting season April 11th. So it's really close, but at the same time, banks are really carrying a lot of that sell-off and are under a lot of pressure right before earnings season. So you can imagine investors will be particularly sensitive to any disappointment in that sector.
One thing that we should note, too, is that as of Friday evening, we heard from JPMorgan that it's now projecting a U.S. recession in 2025.
Exactly. Bruce Kassman, 60% of a chance of a recession, which just a few weeks ago, everyone was talking about how, this is in the 30%, it's unlikely. And everyone I've talked to about today, and I've talked to at least 5 economists, everyone says more than 50%. So things are moving fast.
Yeah, it's really amazing. And this note also just like taking into account, right, specifically what's going on, accounting for the likely impact of tariffs announced this week. So really kind of fascinating to see. It was really all about kind of one major story for the most part in terms of tariffs.
The Stock Movers Podcast from Bloomberg Radio. Check back with us throughout the day for the latest roundup of companies making news on Wall Street. And for the latest market-moving headlines, listen to Bloomberg Radio live. Catch us on YouTube, Bloomberg.com, and on Apple CarPlay and Android Auto with the Bloomberg Business app.